Hi everyone, welcome back to ASX Market Watch. Thank you so much for joining me today. It is excellent to have you here checking out the markets with me. A great way to spend a couple of minutes of your day and also to cap off the week. And why is that? Because we check out all the charts. We basically check out the entire world from a Chartist's point of view and look at all the tools that we use to analyze the markets with, make it very, very simple. But why do we do that? We look at all the indices around the world because we believe that 3 out of 4 stocks might follow the overall market. And if we determine which way the index is heading or the index is heading, then we can determine which way 3 out of 4 stocks might be heading as well. Very simple stuff. It's what William O'Neill, one of the market wizards, believes, and it's what I personally subscribe to as well. Not rocket science, guys, but let's jump into it because we have got a heck of a lot to cover today. So much, it's ridiculous, and so much gold. I cannot believe the amount of excellent stuff. Okay, we'll just jump straight into it, seriously, and what I want to start with, first of all, is the Dow Jones. Why do I want to start with the Dow Jones? Well, let me show you, my friends. This single bar here, actually, let's check it out down here. Okay. Oh, see if I can enlarge it. Yes, there we go. Beautiful. This is the Dow Jones Index. It's a daily chart, so each one of these bars here is 1 day. Now, this single bar down here was where we called the start of this bull run that we've had over the last probably 3 months. Now, at that time as well, I gave an Elliott Wave target based on the Elliott Wave methodology. Now, one thing with Elliott Wave, now you guys might know that Elliott Wave goes in 5 waves up and 3 waves down. So we've got 1, 2, 3, 4. We're currently in our 5th wave potentially. And what actually happened was because this middle wave, the 3rd wave here, was not above 168% of the previous wave. Now, if that sounds like gibberish, then just trust me on this one. Because of that reason anyway, it meant that the 5th wave, the last wave that we're currently in, had the potential to be the longest wave. And that's exactly what's happening. So apart from the fact that we called the start of the bull market, we also gave a target. And I'll just show you the top end of that target that we were looking at. Because the reason why I'm showing you this, guys, is because even though we called it back in December, now people are starting to talk. So the masses have got their hands on it. You know, the news shows, all the regular people around the traps are starting to talk about the US and how it's going up in such a straight line. Now, apart from the fact that we called it back in December, we also put this target. So the initial target was 12,066. It's met that with no troubles at all. The top end target, guys, that we were looking at was 161% of our previous move here. That would bring us to 13,300, a full 1,000 points from where we are today. Now, one thing that I just really want to show you as well, if we look at our regular method, which is trend lines, and again, trend lines, guys, is just such a ridiculously simple method. It's a line on a chart. It's not rocket science. If you check through the old market watches, it's got some ridiculously brilliant ways of finding support and resistance in the market in the future as well. Awesome stuff. Apart from that, guys, here's that line on the chart, just a regular line on a chart. And if we see that the market might be heading up in a similar way, quite a few people are calling that when the Fed stops their QE2 program, which is their quantitative easing program, and that stops in June 2011, apparently, at least this is what I hear, that when that stops, that the market will actually start to falter again. So if we were to bring this into June, and if we just enlarge that, there we go, so June, there we go, so June, that actually brings us, if we go in the same straight line or the same upward line using our trend line into June, that brings us around 13,200. So it brings us around to the similar level. So there's a high potential that we might see that level around June, unless of course people start selling early. Basically all I'm doing now is just waiting for that exit signal, and to do that we'd be looking at a close below this trend line. It's not rocket science, it's very, very simple. A close below that trend line and then a lower peak and a lower trough. You'd see very similar things for the 87 crash, especially for the 2008 bear market as well. That's what we saw as an exit signal, and basically I'm looking out for that to see that again for a downward move after this beautiful up move. In the meantime, the trend remains up, guys, and again, that Elliott Wave target and that trend line target as well could bring us to around 13,000 or 13,300 on the Dow Jones. But again, everyone's starting to talk about it, the masses starting to talk about it, so be careful, because when the masses get a hold of something, usually it's time to get out. At least that's what I've found anyway. The regular Joe on the street usually gets in last, unfortunately, but hey, that's the way the world works. This is the next one, the FTSE. Oh, actually, let's check out the home country. Yes, the All Ordinaries. Let's check out the All Ordinaries. This is a good one here, guys. I mean, what happened last week? Last week, I was saying, here's our resistance here of our previous high. So this is basically the previous high over the last 2 to 3 years that we've got. Now this is around the 5,000 level, which is also a strong resistance point because it's a round number. People find resistance and support at round numbers. It's just a psychological level. Again, it's not rocket science. Very, very simple. And what I expected last week was that the market would sort of go in a sideways pattern or a sideways movement. Look, I mean, over the week, it's basically gone exactly in a sideways pattern, especially for the last 4 days of the week. So apart from that, it's actually still looking quite strong. It's actually just accumulating well just below that level. There we go. That's the actual resistance point, so about 5,047, and the market is really just accumulating below that level. So looking for a potential breakout above that level. Obviously, in the meantime, the market is still heading up, guys. So it found support at the trend line as well, which it tends to do, and the market is definitely in an uptrend now. Again, what we'd be looking for is a close below the uptrend line and a lower peak and a lower trough. Again, not rocket science, very, very simple stuff. And let's have a quick look. As you can see, we've got support at around 4,900 and 4,800 on the All Ordinaries. So still all looking good for the All Ordinaries. I think we had a target of approximately 5,200 or 5,500 at the top end for the All Ordinaries. It seems to lag behind the other markets, so yeah, potentially just follow the trend. Until then, guys, yeah, the target still remains. It potentially could see 5,200 if we follow the Dow Jones upwards. Apart from that, let's check out the FTSE, and again, not too much different from last week. What we were saying, basically, again, the trend remains up. It's not too hard. It was just finding a little bit of consolidation around the previous high here. And again, the FTSE also found support at the previous high, so around the 5,833 mark. But yeah, there's no doubt about it. The FTSE is definitely in an uptrend. What we'd be looking for is a close below 5,940 approximately for the trend to reverse, but that's not looking likely at this stage, and especially because we've got a lot of support where that previous high is now as well, because once that previous high was crossed, it tends to become support. So really simple stuff, guys. If we were to look at a target for the FTSE, just quickly, I think the initial target, there we go, was 6,025. That's been met with no troubles whatsoever. And if we were to go a little bit further into the future, the top end target is 6,800 on the FTSE, and anywhere in between. Again, all we're looking for is an exit signal in between that target zone, and that would be a close below the trend line and a lower peak and a lower trough, like a little zigzag pattern down. Really, really simple stuff, guys. Last but not least is the beautiful Asian region, where we are currently, where a lot of the growth was happening, and people are starting to get a bit skittish about China now. What we called last week were two things, and again, so simple, it will just blow your mind. We had it crossed the uptrend line, which meant that the trend was potentially changing. Then it had a higher trough here, which means that the buyers were still supporting the move, and it sort of moved up there. That was our buy signal there. That was last week, and the market has definitely continued upwards since then. No dramas whatsoever. Still in a short-term uptrend. However, one of the caveats that I did mention was that the Shanghai Composite, or the China market, was still in a medium-term downtrend here. As you can see, here's our medium-term trend line, and we've still got resistance at 3,100 there. So yes, short-term uptrend, medium-term downtrend. What that means is, yeah, obviously, depending on the time frame that you're trading, you could take either of those two signals. One would be to stay out if you were looking at medium-term. One would be to have entered down here if you were trading short-term. So simple, guys. I mean, how simple is that? Really? Really, it's so ridiculously easy. It does not have to be hard. All of the best investment plans are ridiculously simple. It's just the fact that we do have to follow them as well, and sometimes that's hard when we're human beings, you know. It's not ridiculously hard to create, but it is hard to follow sometimes. Guys, thank you so much for joining me today. Again, that has been the world from a Chartist point of view. It's been a pleasure to bring it to you because I love chatting about the markets, and I love having guys like you to chat about the markets with. Thanks so much for joining me, and happy trading until next week. Bye for now, guys.